Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Thursday, July 23rd. So, theme of the day, cues under pressure. For now into support. So we'll go over some levels to watch in the indices. I don't always do that. It's something that I send out daily, by the way. You don't see me post very many charts anymore of the indices on Twitter. We do that in the room, in the trading room all day long in the morning. There are levels that I send out to members in an email as well as both on as private Twitter for levels to watch. But you don't really see me send that out too much. I think one of the reasons why is because the S&P chart has been kind of boring lately. There really isn't much to analyze, so that's also why I haven't been sending out that much. It's been kind of a grinding market. We haven't seen too much volatility. So now, once things start to kind of move a little bit to the downside, then we want to look for support. So I've got a couple things to talk about in terms of the Q's move today, and I think some of the rotation that we're seeing and move into value, and also how to kind of deal with it as a trader, and also the second theme that I have in here is earnings season is basically shaping up to be the usual earnings season in regards to it's difficult to trade. It's always difficult to trade. I talk about that whenever we start the earnings season, right before Netflix reports earnings. I always talk about how swing trading just is a little bit of a different animal. And we do see some choppy markets, and then every once in a while we sell off too. So I think that was the number one question. I think the reason why I'm going to kind of start with the Qs, and well, I've got the S&P chart up here, which I'll start with too. But we're basically coming into support on the 1 hour. So notice these big long wicks. So again, the value areas doing their job, right? Telling us where there's support. We have not got a bounce yet, but you could see we're kind of holding in there right around that 320, 3,227 and a half level. And again, that's something that I've been mentioning too. Obviously different look than where we were this morning. It is kind of interesting that as soon as we kind of take that little, feel like we're kind of turning the corner again, which is where we were pre-market, we sold off pretty decently. So that's going to be the level to watch for tomorrow for the S&P. And again, if you look at this S&P chart here, yeah, I mean it's a little bit of a hiccup here, but I mean overall, could we move down into here? Definitely we could if we break that 3,227 level in the overnight market or tomorrow. There's no doubt about it that we could come back and test in here. So I want to talk a little bit about that. But the Qs or Nasdaq, whichever one you want to look at here, they look a little bit different. Now, one of the things that I tweeted out earlier was that today just didn't feel right, and also this week hasn't really felt right for the Qs. And what I'm referring to is something that I said earlier in the room, is that be mindful of when the market changes personalities a bit. So I said this today around 12 o'clock. I said, I would take note of the Qs. They were bid up pre-market a couple times this week. Today they were coming in. I think at one point I wasn't, writing these levels down, but I think the Qs were up about 1% pre-market at one point, around the high. But again, they're not holding, and they were up, I believe, not as much as that earlier in the week, but there was a similar type of bid to the Qs earlier in the week, and they're not able to hold it. So what I said was, and again, this is kind of before. What time did we really start to sell off today? And I want to go over this 1 hour chart too. This was around. Well, I guess we started to kind of dive right after after this 2 o'clock hour this morning. But officially, yeah, I guess the Q's right around 12 o'clock. But then we started to kind of move. But I thought I wrote this earlier before we started to really move down. And I said that, at least in the short term, something looks like it's changing. And the message there is to, as a trader, you want to adjust to new information, right? You don't, in my opinion, and everything, of course, that we're going through in the video is for information purposes only, not giving out any advice or recommendations. But you don't want to keep just doing the same thing as a trader, unless you've got a trade that you have some edge in and it really works over and over and over. But for the overall market, you want to be able to adapt to what the market is giving you. So if the Qs names and names in the Qs like the FANG stocks and the software names, which have been on an unbelievable tear over the last few months, if they start to chill out, which I believe they are a little bit, then you have to look for some other opportunities in the market, or you have to have a decent hedge on if you're going to continue to only look at growth names. And by the way, the one thing that's nice about a retail trader is, and I know, I get it, some people, they just want to look at the growth names. I understand how it goes. But as a retail trader, no one says that you only have to trade growth names. No one says that you have to only trade the FANG stocks or the hot software names, right? You don't need to do that. You can change like much faster than an institutional fund, right? So it's one of the advantages of being a retail trader, is that you can change around with the market. You don't have to go after the same damn stocks all the time. So I try to say some of these things so that you can be open to newer possibilities. Now, because this is such a big group, right? We know and we've heard on Twitter, everybody always talking about, oh, these stocks make up so much of the market. If they're going to sell the overall market, or if they're going to basically sell like the Qs and so forth, it's going to drag some stocks with it. Because if they're just selling the ETFs, there's other names obviously, in the ETF. But so I would say, that I would watch your levels at this point rather than make, completely wash out of names and so forth. Watch your levels. And I think for the Qs, I would rather give you a level on the Qs, but I would watch the bottom of value for the week. And then understand that you would have to make some changes if we break down. And that's going to be 256.41. So number one is, yes, it does seem like something has kind of changed. They've lost momentum in the short term. Every time they've kind of gotten to this level of 270, right around 270, the market has some issues with it. And notice that we made it looks like kind of a lower high here. Now we haven't really turned the corner to the downside, but that's why I would watch that 256.41 and then make some adjustments, right? Don't be afraid to put some puts on if we start moving to the downside, right? That was one thing that we went over in the room a couple times. Once we broke into value, I said basically I'm not buying anything until the market slows down a little bit. There is a great tweet out, by the way, if I can find his tweet. I'll see if I can show you this. But again, I do like to show other traders on Twitter. Sometimes I give Twitter, I badmouth Twitter because of all the bad things that are on there. But really, there's some really good experienced traders who've been doing this for a long time too. So I really like this comment by Mr. See the Light Trading. The more chill you are when things get volatile, the better it is. My mentor always said. I don't know who his mentor is, but I believe this too, and I retweeted this. When things speed up, I also it's one of the things that I have tried to do is just slow down a little bit. I got a lot of questions today, like as soon as the market goes red, hey, what, I want to buy the dip. What about this trade? What about this trade? And I'm like, well, let's see where this, once there's a change, a little bit of a change, I get it. Everybody's been waiting for a dip that they want to buy. But when volatility picks up, you got to let it kind of shake out a little bit. The other thing to note is that we've been really blessed over the last couple weeks, couple months, where there just isn't there hasn't been more than a 1 day sell-off. That's not usually how it works, right? You know that, right? You know that sometimes there's 3 or 4 days of a pullback. We've kind of lost that muscle memory a little bit. And it's tough for me to kind of say that too to people when everybody's looking for the opportunities to the upside. but the market does come down from time to time, and you just have to be careful, like at all times, not to get overexposed. I will share with you one thing that I thought was pretty funny yesterday. So, I would watch this. I would watch the 20-day moving average. Could we move down to the top of value? I think it's possible. I think it's possible. And I think with earnings season, the one thing to also realize, I'm sorry, there's a bunch of things that I wanted to mention here. But if we look at the Nasdaq too, Nasdaq futures, sorry, on the weekly chart, notice, it's the Qs that are going to look a little bit, sorry, it's the Qs. Notice that we're at this R2. Like again, this is our own proprietary indicator, but we're pretty much, so these are extensions away from this year's value area. Notice where we are and where we're kind of pausing for now is all the way up at this R2. So we've gone a long way, right? And I also think that newer, traders that are a little bit more inexperienced have a tendency to think that the market's just going to go up every day, and not realize that when a market has gotten a little bit stretched. So we're stretched here, and I think if you realize too the way that earnings season has unfolded, and again we still have a lot of the heavy hitters coming out, but we talked about this in yesterday's video, so I'm not going to spend too much time here. But I think you're getting a glimpse of what's going on here. Microsoft reports. What do? They sell off. Tesla is its own animal, so I don't really want to make comparisons. But Tesla was down 5% today on good, pretty good news. Right? I know everybody thinks one thing for Tesla versus another, so everybody's got really strong opinions. So maybe some people think there was something negative out of the quarter. But nice to see this VPOC was taken out. But this thing from where it was, so another reversal. This thing was up pre-market. This thing hit what, 1700? It was down to 1500. So, just kind of think about that. Most names that we are seeing are either just going down immediately on earnings, or they're starting. We talked about the other day Texas Instruments and Teradyne. Two names that also had good numbers. Now, I don't know if these names have recovered. No, this name was down 2.6%. But again, here was the earnings number. So this should be jumping off the page at you, that saying that, hey, the company had good numbers, and they're down from 140 down to 129. Now, these are just a few companies. There's other names that, look at Teradyne. Teradyne does this, though, on earnings for whatever reason. I don't know exactly why, but they did this last quarter, too, where they started to go one way. So make some adjustments, in knowing that companies are not like, I don't know if it's that these names have priced in all the good news. It may be priced into these names. B, there just may not be any more incremental buyers anymore. There's just nobody left in the market to buy. Out of the institutions. I'm not talking about the small traders. I'm talking about the big institutions. If they're not buying anymore, and if they're now in distribution mode, which I don't know, what was the volume today in the Qs? But I'm just seeing this pattern a lot, and it's telling me something is changing, right? You want to see when there's new information that's brought to the tape. You want to see, if it's good news, buyers kind of, take hold of that and run with the ball, and that's not happening right now. So, a little bit more volume today in the Qs. So, the other thing, so I've been saying, make some adjustments. I heard someone, I'm not going to say their name. I talked about this yesterday in the Tribeca Trade Group Q&A session that we have every Monday and Wednesday. So there's a recording of that for members. You could listen to this. But I had heard. So again, I'm going to bring up this particular comment that I heard from someone on financial media who touts unusual option activity. And they had mentioned that they had. So again, I feel like I have to say it because I think it's being responsible. And we went over this for about 15 minutes yesterday. So if you heard me talk about this yesterday, then you can just kind of skip ahead because again, that was for the member video. And we do those Q&A sessions so that we can kind of analyze what the market is doing and kind of discuss what the market is doing. But this particular person said that they had 30 open option positions, 30. And most of them, I would assume, are short term and on the long side. Now, the reason why I'm spending a little bit of time here is because this is very important if you are new to trading or new to option trading. If you have that many option positions open and you get a little bit of volatility like today, you have been smoked. And this is what I said yet. This is before that there was any volatility. I said if you're doing something like that, and how I thought that was a major disservice to newer traders to say that you have 30 open option positions, you are not going to cut it. There's no way. And I've been doing this for a while and I've tried a whole bunch of different approaches, but I could tell you when I'm trading and I'm trading options, the room that I run trades both I trade both options and stock, but I really try to keep my option exposure limited to just a couple positions. And maybe I do take a couple swings at some short-term things because I think that options, if you size them correctly, are okay for that. Again, sizing correctly is the main thing. But if you have over 10, forget 30, if you have over 10 option positions on that have some significant capital to them that are short-term, like inside 2 months, and the market doesn't go exactly your way, you're going to lose. I don't care. I don't care how experienced a trader you are. This is important. It's important to understand that. So I don't really understand how this person, who I believe is somewhat experienced, said that they had that they. I just don't understand how they can avoid a loss in that situation. Because again, when you are trading options, you need a fast, aggressive move in your direction. I'll say that again. It has to be. You have to do two things right in an option position. You have to not only get the direction right, but you got to get the timing right too. So that's why if you have 10 positions on and the market just goes down a little bit like today, because again, today this is quite normal for the market to go up and to go down. And if you have that many positions on that are short term, you're going to get absolutely smoked. So it's very important to realize this. I think with trading stock, so like on a day like this for me, because I'm playing the market mostly to the long side, it's going to hurt me too. But on stock positions, I know where my stop price is. So I'll hit my stop and I'm out, right? Or like I had a position on of Nike today. If it goes back to that I was making money in, and if it goes back to my cost price, I'm going to then unwind the position, right? I'm not going to have a winner turn into a loser. But I hope that helps a little bit. And it's why I try to go over a little bit of strategy, because I just think some of these things that are spread on Twitter or financial media on TV are ludicrous. So anyway, here's my trade blotter for the day. I made a couple mistakes today. I wasn't paying attention to weekly calls. I took a target in something, got busy managing the room, and next thing I know, I turn around. Then those options are down to, after I took a target at 220, they're down to like $1, and they're marking much less than that now. So that's a full loss. And again, you have to put the right position size so that you don't really get hurt in a weekly option position, even if you're just day trading them. This was my Tesla trade. This was a huge winner, right? I talked about selling premium. And again, that's really how I'm playing earnings season, is just selling premium. Because I too believe that most of these names have just gone up too far. And these brokers have pumped up the prices, right? They've raised the price targets over and over and over, and then when the name doesn't they've made the brokers have made these stocks price to perfection. So when they say something that is not perfect in their earnings call, they're going to come down a little bit. All right, so that's it, and then I just decided to kind of chill out a little bit. I got in. I tried to buy CTX on the dip today, but I just saw the overall. And when I do see that the Qs are coming down hard, I just get out of the way. I sell a couple things, and then I know I can kind of regroup later. I gave a couple shots to. I tried a few things like PayPal for an end of the day trade. That was unsuccessful. So again, that's fine, right? And that's what I mean. Like, it's not a big deal. I get stopped out of PayPal, I lose 50 cents. Um, you know, wah. It's not the best thing. All right, so let's go over a couple things. I also wanted to illustrate. I talked about this in the room. Something that has helped me a lot, right? We talked about how traders like to buy the dip. But we don't know, like, no one has a crystal ball, and there's levels that I do like to watch for support. As I mentioned, the level in the Qs. But the other thing, when you're buying the dip, one of the things, like, people talk about having multiple indicators on their charts. Some people don't like it. Some people do like having indicators on their charts. For me, every single line that I've got on my charts, I use for a particular reason. So this fast one in here, this is what was this? This is the 20 period moving average. Notice that we could not. So why I use this one, right? The 20 period moving average. It just kind of tells me where the short term trend is, right? So again, I'm using this on just a 5-minute chart because I want to know if buyers are coming back or if sellers are still in control. Notice that since basically this morning, even before I realized, price ducked under this 20 period moving average and basically stayed under it all day long. Tried to rally here around 9:45, so 15 minutes into the open. Tried to rally here again and failed. Tried all these little candles in here. Right, some people use VWAP too, which you can also use, but I use the 20-day moving average. So very similar. Here we didn't even get to the 20-day moving average. And then at the end of the day, if you were looking to buy the dip, now I don't know what's going to happen in the overnight market. Maybe we do bounce. I don't know. But I don't like the fact that when we could not get through this, right? So when I see something like this, when multiple times where we're testing this 20-period moving average, I know that the sellers still have control. Right, so I hope that that makes sense. So it's a good way to use these short-term moving averages. They're kind of like a little bit like just visually, they're like training wheels, right? You can see that the buyers do not have control all through this. So it's a nice way, like if you were looking to kind of buy the dip in some things. I like to see price get over those lines, right? The more of those lines they can get over, the better. Like I was looking at Crowdstrike today. It did, which is good. It did manage to kind of get above that, and that was enough for me, and that's why I took a little bit of a trade here in, where is it? Somewhere in here. There should be. I did buy a little bit of this here, this one. So again, just kind of wetting the beak a little bit. Doing that, buying some names, and again, I like to look for names that I've been trying to get into. I wanted to show you a couple other charts too, and that'll be the end of this video because again, for some reason I seem to go on for a while, but there's a lot of talking. Look at Pepsi. So like another chart that I think is kind of interesting is this growth versus value, right? So this is short. This is small cap value over growth. It's trying again, right? We talked about this in here, and then this was Monday, I think, where growth outperformed. Remember this lasted for about a month in May. It's trying again to get over the 50-day moving average. Value is trying. So that could be a part of the function of the earnings season. And I think again, maybe the best message to come out of this video is again, be careful with your risk around earnings season. It is a difficult time to trade. It is a very herky-jerky, choppy try to use as many adjectives, but yeah, I mean, there's different groups that are starting to participate, right? So I'm trying to like be open to the banks, even though Morgan Stanley went down today. IWM was at one point was up 1% for the day. So this is something I'm watching. Again, and look at the difference between IWM today. It sold off with everything else, but at least it kind of recovered a bit. So again, I'm not sure if I'm going to completely jump into the small caps here, but I'm looking. I'm looking for some different things, and I'm open to some different trades. I also, in our tactical portfolio, finally made some changes today. I've been pondering how to kind of rebalance. I also manage a portfolio of a little bit over 30 names that are more medium to long term. Well, I decided to take out a few growth names today. So and substitute a few other different groups. So I think that will kind of play a little bit for the market that we're now experiencing. All right, guys, have a great night. See you tomorrow.